Investors and traders, welcome to the channel Market Chart Pattern. Today is 17th of September 2023 and I hope everyone is having a great weekend. In this video segment, we are going to take a look at the key US tech stocks, as we always do for this segment. This video is for educational purposes only and it is not a financial advice. So we'll start by taking a look at the weekly chart of Apple computers, and we will analyze the key pattern formations and the key price levels to watch. So this is a longer term chart for the Apple computers, and the pattern that we are watching for is $170 per share level as a key price. And then it's also possible that your price could actually in fact pull back to as low as $160 per share level. That is about 50% of this move. And also we have this little line coming in providing support, and also we have this one-to-one projection ABCD that will also complete around this level. So this is what we are watching in the Apple computers level. Longer term, what is really important for the stock is this $120 per share level. It's really important, because there are so many confluence levels that come together here. As long as the stock remains above that, we are positive the stock. If the price closes below consecutive basis on weekly chart $120 per share level, then it means that at least in my opinion, that the price could pull back much lower, and it could be a fairly longer term corrective action taking place in the Apple computers chart. So this is what we are watching on the Apple. Let's also take a look at the daily chart as a similar kind of a picture, but of course the daily chart is a little bit shorter term. We do have the 200-day 200-day moving average coming around $165 per share level. So again, these are the zone between $170 to $160 per share level that we are watching. Let's move on to Tesla. So this is the weekly chart of Tesla, and here we are watching this trend line here, which connects this low with this low. And the patterns that we are watching for is, in fact, if this low of 14th of August 2023 is not taken out, we are in fact looking at $350 per share level for this stock. This is going to be a one-to-one projection, A, B, C, D, right, going into it. Now the key is, of course, this point C, if it remains intact. So here we had identified this level of $200 per, roughly $300 per share level in advance, and what we have seen is the market goes into a correction or a pullback for several weeks after hitting that. So this is the next key one that we are looking at, where the price actually is, or the level that it touched, roughly around $280 per share level. That's a really key level because it is the 78.6% Fibonacci retracement. Once the price clears this, if it is able to clear this, then $350 per share level is the next one that we're looking at. So this stock is really trading at very critical level. Let's take a look at this on the daily chart. So this is the shorter term daily chart, and what we are seeing is also after finding support from this region, which we had also identified in advance, it went a little bit below our level of about $225 per share level, but it formed a abandoned baby bottom and it's just been rising. So where it is at the moment, let's just do a retracement, and I'm going to bring the 78.6% Fibonacci retracement. So this is a key one. It's possible that the stock might find some resistance from here, maybe even pull back a little bit, fill in this gap. But if it is able to take out the $280 per share level, on a closing basis, consecutive days on daily chart, then $350 is the next one that we're looking at. Really longer term, more for investors, there is a possibility if it is able to clear the $350 per share level, the stock would hit as high as $500 per share level. It's seems maybe a little crazy to think about it, but if the levels that we are watching for, the $350 per share level, all these key levels, if they're broken to the upside, it might become a reality. So we'll just keep on watching because this is what the pattern is telling us. Let's take a look at now the Microsoft. So the Microsoft stock had a fantastic run from the October of 2022, pulled back right into the early January 2023, and then it's just been moving higher. And we were bullish this stock. It has what it has done is tried to break out of this really long trading range. And what happens is that majority of the time, as the breakouts, they fail. So it has pulled back right into it, right to the 38.2% Fibonacci retracement. Now the stock has been rallying for quite a while, so the expectation could be that perhaps it could be a 1-to-1 or a ABCD kind of a move lower, which could in fact retrace right up to the 50% Fibonacci retracement, and that might certainly be a possibility. So this is what we are watching. All depends upon this key level of $310 per share level, which is the 38.2% Fibonacci retracement of this entire rally from the October lows of 2022. So again, this is what we're watching in terms of price action for Microsoft. Let's take a look at Netflix now. Oops. Netflix, here we go. So this is the weekly chart of Netflix. The key retracement was this 61.8% Fibonacci retracement. I'll just move down to the daily chart because this is what we were looking at. We had identified a pattern way in advance. We were in fact looking for about $495 per share level. We didn't get there. But we did get close enough. We got to about $485 per share level. $485 stock, and we missed it. We missed the target by about $10. Maybe in my books, it is acceptable, but it missed the 61.8% Fibonacci retracement. Now there was a chance because of this trend line that if the positive momentum would take hold, which it did, it might actually go and retest these highs one more time, and in fact hit that $495 per share level, which is a 61.8% Fibonacci retracement. But as of last week, we have seen selling pressure come in the stock, and it came right from the 61.8% Fibonacci retracement, one of the key retracements that we like to watch. So now the pattern formation is changing a bit, and it appears that it could be a 1-to-1 projection ABCD, and the key level that we'll be watching is around here, about $360 per share level. Let me actually draw this like a line or something like this to highlight this. So this is the $360 per share level that we are watching. And the reason is that it will also be the 38.2% Fibonacci retracement of from the lows back in 2022. A really key one. It's also a trend line coming right into it. So a number of things coming together, a confluence of different ratios and patterns coming together around $360 per share. So this is going to be a really key one. So we'll be watching this really closely. It's about $30. Thereabouts lower where the price is right now. So there's a possibility it could get there. If the price begins to break below that, then we'll have to look at it in a different way, because the 38.2% Fibonacci retracement would have also been broken. But for now, the next key level to watch in Netflix is about $360 per share level. Let's take a look at Meta. So the Meta stock is pretty strong, and we became bullish once the stock broke above the $200 per share level, because that was the 38.2% Fibonacci retracement from the all-time highs reached. And when it began to broke down from the all-time highs, it went to the 78.6% Fibonacci retracement from the IPO lows. So, when the IPO happened, after that there were lows. If you take that low and you take a retracement right to the all-time highs, 78.6% Fibonacci retracement. This is where the bottom came in, and it's been a really strong rally in the stock. Really, impressive, fantastic stuff. So the key thing that we are watching is right here, $265 per share level. Let me actually also draw a box around it. So there is a possibility, based on the price action, especially last Friday, that what we could in fact be looking at is a one-to-one ABCD. So the key one as a first target to watch will be these $265 per share level, because of the one-to-one projection ABCD, also 38.2% Fibonacci retracement. If the stock begins to break below that, then we have lower levels to watch for, and it could be possible that the stock could actually move quite or accelerate down quite quickly. And then of course we have the triple two, is the 200-day moving average coming right here. But for now, we are watching $265 per share level as a key point. If it begins to break below that, and then we should be a little bit more concerned and begin to look at a few other pattern information. So I will keep you informed. Let's take a look at Shopify. Okay, so the Shopify stock, we were looking for about $82 per share level because the 38.2% retracement. But we're gonna look at the stock. It was really rallying really nicely in this channel formation, and the fact remains that it's not been able to actually meet its 38.2% Fibonacci retracement as well. It's been running for quite a while. And also every time it hit the top of the channel, it would retrace down, test the bottom of the channel, but this time it actually broke the bottom of the channel, retraced right to about $53 per share level, which is the 38.2% Fibonacci retracement. It had a strong rally right up to the 78.6% Fibonacci retracement right here, and now what we are seeing is some sort of selling pressure perhaps there, or maybe it just might be a pullback. Too early to say because we have the 38.2% Fibonacci retracement right here. However, if it begins to break below the 38.2% Fibonacci retracement, coming around $61 per share level, then the chances of this one-to-one projection ABCD right down to the $48 per share level, they increase. So again, a key level to watch for next week for this stock is about $61 to $60 per share level. If it remains above that, the chances are that maybe it could rally higher, and if it of course breaks the 67.50 level, then the chances for hitting that 38.2% Fibonacci retracement, they increase. But this 78.6% retracement, the way it has found resistance from that, it remains a concern, and it might be the case that we have a one-to-one ABCD sort of correction at our hands for this stock. While we are at it, let's also take a look at Amazon. So the Amazon stock has also had a rally after hitting this level of around $80 per share level. And if you watch really old videos while this was happening, we were watching certain kind of key pattern formations that we informed that this is perhaps where a really strong support is coming in because of a number of key patterns formations completing, and also there was a double bottom. You'll have to watch the old videos. Maybe I'll do a special segment end of the month where we just cover all these long-term patterns just to refresh what we were looking at back at that time and how it has panned out. So this stock has rallied, and what it has done is, this stock really likes to do double bottoms and double tops. So we are really watching this one really carefully because it did break all of our upside targets, and now it has gone and tested the top coming in from 16th of August 2022, so a little over 1 year ago. And if the price action begins to fail here, and if this becomes a confirmed double top, that will happen when these lows around here, $130 per share level, are taken out to the downside. And then this stock will retrace quite deep, because it has been in a really big trading range for quite a while. In fact, from the March 2022 lows, And in fact, what it has done so far is just retrace pretty much half of that trading range. So let me draw a retracement real quick. Here we go. Let me bring 50%. It broke that. So it's just right at the 61.8% Fibonacci retracement, one of the key ones that we like take a look at. In fact, I am actually going to 0.618 and make it bigger because this is a really important one and could be a focal point, or in fact a pivot right here for this stock. So look at the pattern formation which took place here. This is a double top here, possible top here. So the stock is just kind of repeating what it does, and it also likes to do bottoms. So bottom, double bottom, top, double top. And if you look at this really big rectangle here, it's a bottom rally to 61.8% Fibonacci retracement, possible double top here. The stock goes lower from here perhaps. Again, this is something which we are watching, so it's really trading at critical level in my opinion. Let's take a look at the last but not the least, which is the Roblox. Oops, chose the wrong one. Here we go. So Roblox is the one which has actually disappointed us. We were watching for these pattern formations to the upside, maybe reach 50, 60, $60 per share level. Given that this point C was not taken out to the downside, which it did, now the pattern formation has actually changed. So I'm going to remove those right here because I like to do things live because we like to keep a track of it. I'll leave this one here because it's just still, testing it. And yeah, I think we should be okay. So yeah, disappointing price action in Roblox. We are just watching now, waiting for further confirmation from a price action perspective. Momentum is also looking bad for the stock. So yeah, maybe this is something to be we should stay away from. But because it's related to metaverse, so it's one trend that I am actually watching. So I'll just keep it here. We'll just keep it. We'll keep on watching the price action for this one. Let's take a look at Baba. It's not a stock we often look at, but what we are looking at in terms of Baba is as long as this point C 61.8% Fibonacci retracement remains intact, the possibility of this ABCD pattern remains. However, if we look at the price action, it has found resistance from this little line, and we have this nice trend line here. It's also broken below that. So the price action does look in fact weaker over the course of last few trading days and weeks. So we are still watching this. Maybe it just goes around here and tries to find some sort of a bottom here. But the key one is this 61.8% Fibonacci retracement, because if the price begins to go below that, our pattern formation that we are watching, it will become invalid. Then we'll have to view the stock in a different way. But for now, we'll just keep things the way they are and keep on watching the price action. So one of the things is about this stock, just going back here, the big bottom came in around 18th of February 2016, but we had a rally 30th of September, right? So it rallied right here, and then it had a really significant pullback almost to test these bottoms again. And when there are real bottoms, this is how the real bottoms are formed. We'll have a bottom formation, and then we'll have an internal bottom. So the price comes and tries to take out or test the lows one more time, and if it fails to take the lows out convincingly, it might do for for intraday basis or maybe a couple of days these days. But if it moves back up, this is how the real bottoms are formed. So almost always the bottom gets tested. So again, could the similar pattern is being played out? This is what we are watching, and this is why um, you know uh, in my longer video that I had done about Baba, I made this as an example. So it's possible that the 61.8% Fibonacci retracement might get taken down to the downside, and it might just come and try to test this bottom one more time. And if this bottom is held, then we have even more conviction that maybe a pattern like this is in play. But certainly it's not going to be that easy emotionally speaking, and not for a faint of heart, because when the stock begins to pull back, unless you have real conviction and you have done some sort of a real study about the stock, it could be emotionally difficult to hold. But again, this is what we are watching for. This is why we like to take a look at the pattern formation and pattern recognition to give us clues, so that we are able to anticipate a few things. So again, this is what we have been looking at and watching these key US tech stocks, and also Alibaba as an exception. I had a look at it because it's also traded as an ADR on NYSE. So thank you very much for watching the videos. Do apologize that this video is a little bit longer than the usual one, but I was not able to make frequent videos, so we had a number of things to cover. So do apologies for the long video, and if you find this video of educational value, please do like the video. And if you found that the way we look at and analyze these markets from a technical perspective using pattern recognition, Fibonacci ratios, price projections, retracements, extensions, expansions, then please do subscribe to the channel and hit that bell icon button. That way you will stay in tune when the new videos are posted. So thank you very much for watching once again, and have a fantastic weekend, and good luck and good trading.